Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Day 4 or 5, whatever this is, if you've never seen this before, it's a 4-hour follow through. I only look at the 4-hour on Bitstamp, Bitcoin USD. This is my trading checklist. This is what I'm looking at. Let's get started. So we have a firmly established lower low. You have to ask yourself a couple questions here. How early can you determine that that is a firm lower low? I think at 3 wicks, this is completely arbitrary based on just personal preference, 3 wicks is good enough. Obviously this is hindsight, but look for this the next time, okay? So you get a lower low. You need to figure out two things. Is there a div? Is there divergence using RSI, volume, MACD, Stoke, any oscillator? Is there a harmonic? Do you want to play harmonics? Do you want to draw harmonics? Do you give a crap about harmonics? That's what you have to figure out. Harmonics are tough. Personally, I try to avoid them. I've been using them more, trying to get better with them. Divs, however, you should be able to just notify and knock out of the park instantly on every chart, no matter what it looks like. I talk about divs in all my articles too. One thing you need to realize is divs are definitely a lagging indicator and can keep building. Look at the oil weekly chart. I talk about the oil weekly chart a lot just because it's so technically driven, even though you'd think there's so much fundamental stuff around oil, obviously with OPEC and shale and all this other stuff, but on the chart it just looks so technical. So anyway, just like here, you have a lower high. Is there a div? Do you want to count this nonsense? That's what you have to ask yourself. So I drew in that butterfly last video. I'll get to that, but let's start off. So naked, I don't see anything here other than obviously some pretty insane buying. In the 4-hour, you're not going to be able to see the structure of this, but if you zoom into the hourly or lower, you'd be able to see it. I know it's there on the 30-minute, what it looks like. There was a 30-minute Kumo entry, cloud entry on last night, basically. Okay, so that's candles. Let's check out fibs. Everything's going to come on here. So you can see I drew in this harmonic. Now the question is, do I use the butterfly, which is this, or do I use this new harmonic? I don't know the answer to that. But I'm just going to stick to the butterfly because it's working out so far. This fits really well. I don't know what to call this, but whatever this is, Nenstar, no clue. Anyway, so, that pattern 1.1, what was it? 113, 127, something like this, which is basically return to previous high. Nothing new there. Just going to take it off. If we talk about fibs, you can see not too much help as far as actionability is concerned. Yes, it reversed here twice and then it busted through and now it's support. But again, this is the wrong time frame to look at these fibs because of how fast this is moving. You want to look at these much lower. Anytime you get these large candles, you have to zoom in to get a better view. You're not necessarily going to get better signals, but you're going to get quicker signals. So that's fibs. We go to Heikin Ashi now. Let me turn everything off. You can also see it broke out of this wedge. Again, how actionable that is, I don't know, but it's something to watch. Maybe as this was closing again on a lower time frame, breaking 1,000, a psychological level. Maybe it was worth the long then. I wasn't watching it, but you could certainly watch it on a lower time frame. All right, so here we go, Heikin Ashi. You can see this is the candle. We were in a trade. We got stopped out at break even. This would have been the entry here, 988, based on Heikin Ashi, which again I wasn't watching yesterday. This is a great example of why break even is a generally frowned upon strategy. Either use a trailing stop or just keep your stop where it is. And you can see based on when we entered this trade, the fractal stop was down here and there was no Heikin Ashi stop. The Heikin Ashi stop got established once the pullback occurred, and so did the new fractal a few candles later, but that meant we were already out of the trade. So again, that shows you how important the entries are and shows you how important efficient use of stops is. So this will start to get messy, but one thing you can do if you're trying to figure out, is this the bottom? How confident am I on this confluence? Here's just an example of a pitchfork, downtrending pitchfork. You can see we're breaking out of that. It bounced around a few times here in the pitchfork. Tells me it's sort of real. Not a great example of pitchfork. Right now I'm just not feeling pitchfork bullish or bearish. It's just huge ranges right now. Let's go back to the 5200. You can see that broke the 50 pretty cleanly. That's good compared to last time. And the re-short would be at 1090, which is certainly risky looking at how this looks. It looks very strong right now, but that's what the 200 wants you to short from. And if we turn on the cloud, you can see the cloud is usually right there, right in this zone here. Now, if I'm already short and I'm looking at the candles breaking the Kijun pretty cleanly, if you're short, your asks are at the Kijun, your stops are at the cloud. So right now you're in negative territory. This will cross TK cross bullish soon, and then you'll sort of be in no man's land as far as checklist is concerned. So again, the 5200 cross is what you're waiting for, or you're waiting for a bullish Kumo breakout with a Kumo twist. And the cloud signals are the signals that I use personally for entering a position with size, meaning not a quarter, not a half, but 2, 3, 4 Bitcoin at a time. Just real quick back to divs, you can see again lower low, but on lower volume. So it's a volume div. And again, lower low, but on lower momentum. Less momentum. So again, it looks very suspicious at the time, which is why I entered that long a few days ago for a reversal. So overall, Bitcoin looks continually bullish. Obviously, it's nothing I want to enter right now if I'm not already long. I did mention this, but there is a daily inverted head and shoulders. I talked about that in the Bitcoin Magazine article, so check that out. All right, so this is Ethereum now. I'm going to use Ethereum USD Tether. A few people wanted to see me bucket USD instead of the ratio. So right off the bat, you see a few things. Obviously, it's at all-time high levels, and you got to ask yourself, do I want to buy up here? That's number one. You do see this Adam Eve at the top, which is not too common. Usually it's at the bottom of a trend. Again, this tells you it's continuation. It definitely hasn't hit the Adam Eve target. You can see how the Adam is also deeper than the Eve. You'll see that more often than not. Sometimes they match the levels, sometimes they don't. And you can see how many waves this has had. 1, 2, 3, 4, 5 now. And again, it's at all-time high levels. Are you expecting volume to be higher or lower up here? If you want to be long, you're expecting higher volume, and guess what? Volume is not higher. So there's definitely a divergence in volume as far as that's concerned. You can see there's some sort of low time frame flag right here going on. Again, you're not going to be able to see this on the 4 hour. You're going to have to go down to like the hourly to look at it, but it's something I want to take a position on. If we look at the oscillators, again, lower high in RSI versus a higher high in price, that's a bear div, and Stoke is not even on the ground yet, but about to be. If we look at Ikenashi, it's largely a garbly mess up here, again, because it's flagging. So your long signal would be 2 green candles, but again, nothing I want to touch. This Adam Eve does look really great though, but not actionable at this point. Certainly, it's already at all-time high levels. If we turn on yearly pivots, you can see, that's pretty interesting that this is support. It was previously resistance. This would be the next target up. 58, 57, something like that. There's definitely some sort of rising wedge type situation here. Let me take a look. One of my favorite counter trend plays is the rising wedge plus div pullback trade. So I'm expecting this to pull back pretty heavily pretty soon. This is clearly a rising wedge, just as Bitcoin is in a semi-falling wedge, so it kind of makes sense. If we look at the 200, as far as a level is concerned, that makes sense. We can also fib this out if we go from approximately here to, we'll say here. That gives us another target, the 50%, but really we can go even lower. Really depends on what you want to do. So I know this is starting to get messy, but the fib, if you take it from the last time it touched the 200 till the expected target of the rising wedge, the 50% is somewhere around 33. So the zone for support would definitely be between 30 and 34 as far as a pullback is concerned. If we turn on the 50 as well, you can see just like the cloud, when price dips into the cloud and then emerges from the cloud in an already established trend, I think that's a great entry signal. So obviously hindsight, look for it in the future. You can see it keeps getting held up by the 50 here, but I think the next play would definitely be in the 30 zone as far as bids are concerned. And I'll look at this on the ratios as well to see if it's worth putting bids on Polo at that level. And it's no surprise the cloud support is right at that same zone between 33 and 35. So I think that whole area is good as far as the falling wedge breakdown target. Even if we go from this up here, 50%, 37. Wedges, triangles in general, like to break when they're 3/4 full, and you can see this is pretty damn close to 3/4, so it's worth watching in the next 6 candles for sure. And as much as I like shorting this setup, it's pretty risky because you're already in a bull trend and you're trying to scalp a counter trend, which is never a good idea. This could easily just keep going, as did Bitcoin's rising wedge on the daily before all the madness happened in November, December. So that's why I prefer bids in this level versus shorting here. Certainly a viable option, but pretty risky. Then lastly about this cloud, everything looks bullish, so there's no entry again that looks clean or anything like that. You're just waiting for the pullback at this point. And then real quick, the pullback would be again the cloud, and the fib is telling you 0.03. I think is a good target. It doesn't look as rising wedgy on the ratio here. I do still like this high target with the flag, but does it have momentum to continue making higher highs in all-time high area? I don't know. I don't think so. We're starting to break down from 50 on the RSI. Stokes trying to cross at the bottom, so this is trying to tell you it's fine trying to find a bottom, but until it breaks this threshold here, I don't think it's worth going long, that's for sure. Looks like Dash had some nice bleeding today. First things first, again, lower high, ask yourself, is there a div there? Do I want like a volume, Stoke, or RSI, or MACD? You're also seeing a really nice, really long tweezer. One of the better tweezers I've seen in a long time. I don't know if that's just because the book is thin, but that's a perfect example of a tweezer. This here, this long-legged doji, is also an example of market being in equilibrium, 50-50. Usually a reversal candle, saying that this is the interim bottom. That's supported by the cloud as well, because that's cloud support. Oh, snap! So we'll see that Dash wants to keep going. The short entry would be a breakout on volume below the cloud, so you're waiting for a candle close below the cloud. The edge-to-edge trade was somewhere up here, and when this closed in the cloud, you can start edge-to-edging as soon as it closes right there, and the target's always the opposite side. So the targets are always there before you even want to think about it. They're already there. So Dash looks best to stay out. You're looking for a long. If you're looking for a long, this is what you're looking for. You're looking for the TK cross recross. You can see how the TK crossed bearish here. So you're waiting for price to be back above the cloud with a bullish TK. For a short entry, you're looking for a candle close below the cloud on volume. Let's see what volume looks like. Let's see, we got the lower high stuff with the div doesn't really make much sense here. As far as oscillators are concerned, you can see RSI, the lowest it's been in a long time since the beginning of the trend. This is a nice trend reset. Yeah, long time. Let's see. So Dash hasn't been this low on the RSI since the W below the cloud. So it certainly leans bullish continuation, especially when I'm looking at this insanely amazing tweezer bottom with the 50-50 doji here, the long-legged doji. I've tried to draw a pitchfork on harmonics on this, and nothing really made sense to me. Again, similar to the edge-to-edge trade, anytime you get a candle close below the EMA, there's a play possibility there. Again, it's also a counter-trend scalp sort of thing, so it's not always the best idea. And lastly, another way to play this, like I mentioned the other day, this double top down to the 200 EMA, I think was a great target. And Cloud says the target's already essentially been hit. So Dash doesn't look like anything I want to be in right now. It certainly looks interim bottomy, but I would rather wait. Again, Dash is at all-time high levels, so I'm not going to hope that it just bounces here and keeps going. I'm going to wait till it gives better signals for the long. So still on no position. And you'll notice that's kind of weird. Why am I not in a position every video? Aren't I a trader? What am I doing? And just because you're a trader doesn't mean you need to be trading all the time. You're looking for signals, you're looking for entries. You don't want to just be blindly going in. Even that entry I had 2 videos ago, it was up 37%, but the entry was garbage and I got punished for it. And I didn't use a trailing stop and I got punished for that. So your entries really need to be good. They're really important, especially in the crazy swings we've been having lately. Like, dislike, comment, subscribe, hit me up on Twitter, Telegram, and happy trading.